the informed investor, thanks to Century 21. Smarter, bolder, faster. Go to century21.com.au.
The chairman of Century 21 is Charles Tarby. I tell you every Monday night he knows more about real estate than anyone else in the country. Charles, good evening.
Good evening, Steve.
The all of the shenanigans that took place down there in Canberra last week, does that have an impact on the property market?
Yeah, it usually does. Usually when elections called, it does. But I think we're already in a climate where things have been slowing down. So the impact was not felt the way it was normally, other than the fact that when we were doing some advertising and some campaigns and we were working with some advertising people, they dropped me like what do they say? It dropped me like a ton of bricks because of what was happening with the election. There was no time to talk to us about anything. No, Steve.
The idea that we had to work out why housing prices in our major markets like Brisbane, Sydney, and Melbourne were going up. Well, here's a reason why. Melbourne today registered the fact that it's now got 5 million people living there. No wonder the house prices went up, because it's the old story about supply and demand. It
is, and at the same time, Steve, the Adelaide population dropped. And this is why those two marketplaces is probably something we haven't looked at for a long time, is population. We look at all these other stats, but population really does tell you, doesn't it, whether it's increasing or declining. It's going to tell you if there's going to be a change in the marketplace.
It's not just about purchase, though, is it, Charles? I mean, look at the rental vacancy rates in Victoria. I think have hit a record low. Figures from the REIV, Real Estate Institute of Victoria. Vacancy rates dropped to just 1.8%. I imagine it would be similar in Sydney. That makes two things. Hard to find somewhere to rent, and you're going to be paying a lot.
Yeah, and actually that stat has dropped even more, Steve, since that came out. That was published recently, but the stat was recorded a short time ago. It's actually dropped this week across the data that we've received to 0.74% vacancy rate in Melbourne, and Sydney is sitting at 2.04%, while Perth is sitting at 8.61%. So there's an incredible difference between the capital cities. So, like tenants over in Perth have got a fantastic opportunity. They can negotiate with landlords. They can get, a few weeks rent-free to get people in, whereas in Melbourne, they'd be lining up around the street corner to get into a property.
So if you're a landlord in a place under rental stress like that, I imagine you'd be looking at perhaps tweaking a bit of an increase in your rents.
You would, and some of them do, and some of them go a bit out of line. Steve, it changes quickly, and although I don't think it'll change too quickly in Melbourne, I still think that landlords need to be mindful of the fact that they've got a good tenant, that they're better off staying in the long run with somebody that's looking after their property and paying the rent on time than getting that few extra dollars, because they may increase it, but the increase is sometimes not worth it. And there are some landlords out there that will probably do exactly what you've said, and that'll be a bit disappointing especially if they've got good tenants that have been paying for it, on time every day they do.
What sort of advice would managing agents be giving to people who are landlords? Would they be saying, let's screw a bit more out of them, or would they be saying, if you've got a good tenant like you always do, hang on to them and don't push them around?
I'd like to think that they do what they've got to do. We always have to have our rent reviews, and that's part of the process. But I'd like to think that they do it in an appropriate way. The problem with it, though, Steve, is that rental increases are hard to work out. When you talk to agents sometimes and you say to them, look, how do you know what to increase the rent by? Sometimes they'll increase it based on what they see in the marketplace being advertised. And I had a vivid example for myself when my two children, who have an investment property and it was managed through another agency because it was out of area, they have an investment property in the same street, both of them. And one was getting $375 and the other was getting $450. And when my daughter's property came up for renewal, she said to the agent, $450. And the agent said, well, that's a massive increase. And I said to her, tell the agent it's not about the increase, it's about what they're worth. And so sometimes if you can get a situation where in the same street a property is a lot lower than the other because the agents are not in tune with the marketplace. So it can be actually negative for landlords too, Steve.
Well, these days with REA and Domain, it's pretty easy to check, isn't it? You can go and you could find out just about what every place in your street's being rented for.
Yeah, you'd think so. But sometimes people don't use that information. But I think realistically, if you've got a good tenant, I'm in that situation right now. I've got the opportunity to either renew a lease or decline it. And I decided to keep the lease the way it is, with the rent the way it is, because the tenant's been there for 10 years and they've looked after the property, and I'm more inclined to worry about the asset than I am about the rental return increasing by a few dollars.
Yes, I had an increase requested and I pushed back. You should do that. Just say, well, hang on, justify why you're putting it up. They made the argument and I accepted it.
That's a fair comment. Yeah, look, you've got to negotiate no matter what. Anybody that pays the first prices presented to them nowadays really needs to rethink about whether or not they should be negotiating on their own behalf.
We're on air in Shepparton and Warrnambool. Those places are going pretty well at the moment.
Most of the areas are still feeling the edge of a boom. Isn't it funny how the other markets are going downwards, but you've still got markets like Hobart and outlying areas still increasing because the tide still hasn't risen out there the way you might have expected it to. I'm sorry, the halo effect hasn't finished in some of those areas. So this is why we encourage people to have a really, really good look at the pricing when they're buying something, because at this point in time, there's that chance that the prices may change downwards. A lot of the banks are pushing now for people to go into interest principal and interest loans rather than interest only, because they're concerned about the fact that negative equity might kick in if we're not careful in some areas, particularly if you've bought in the last year, because those people that have bought in the last year are the ones that are going to be impacted mostly with the reversal of the prices. So people need to be very careful what they're doing in those areas.
Great advice, Charles. Thank you, mate. I'll talk to you next week.
Thank you, Steve. Bye.
Charles Tarby there, Chairman of Century 21. Shepparton and Warrnambool, prices previously in decline. We're now told entry-level medium prices there have gone up 5.7% and 4.4% respectively in the year to June 2018. So if you are thinking about buying or you have invested in those areas, you're doing well.